Now, Shweta Sawant asks, how to identify stocks worth buying during a market fall?
You should not go about identifying a company when the market starts following. I think the right way of identifying a company should be on. Investing in a company is a very requires rigorous effort. Broadly, 3-4 things which one should keep in mind: that the company is growing, the company has good return on equity for shareholders, and so company is growing, company is has decent returns on equity. Then company is is not leveraged, has not borrowed money too much, because you face a bad weather and you go under. So you are a resilient company, and then it is managed by a good bunch of nice people who will not steal money, because it's the agency risk. You are effectively entrusting your money, your company to somebody else to manage it, and he will empower him with lot of authority, and so in that sense, trusted people. So if you have these 3-4 things, carry on with your work, and then comes, if you have all these things in place, then you should be buying that company's share at an attractive price, because you can buy a great company, you can spot a great company, and you can buy it at a fancy price and never make money. So once you have done these things, make your list, have your watch list, set it up on Value Research Online, and keep looking at it. When the markets fall, you will be in a situation to pounce on that. So you have to think like, you have to really be ready with your list of things that you would like to pounce on, like waiting, like a prey, spotting a prey. So look at your investment alternatives like that, and that I think should prove to be rewarding. And this requires a very unusual characteristic for very successful investors. It requires patience, because many a times the market, you can have your list of companies, and they can remain very pricey for a prolonged period of time, for 1 year, 2 years, 3 years, and that is the time when you should be waiting with your money, not invested, because we have been always told that your money should be at work all the time, or you have to do something. No, this is something, equity investment requires that patience, that attitude, and I have come across all the great successful investors who have, it's more about temperament.